Good evening. This is Sarvo Srinivasan on EPS 95. I have been airing my views in Tamil mostly for the benefit of the many people who are in Tamil Nadu, because my channel has got one basic element which I started in 2011 for reviewing the Tamil movies and even sometimes Hindi movies or Telugu movies, which I normally used to do it only in Tamil. This has been out of my passion. I have been having this YouTube channel. Later on, this YouTube channel got converted into a cooking channel where more than 270 traditional dishes were prepared by my mom and then by my wife. So both of them together they prepared a lot of dishes to the benefit of the very viewers, lot of viewers in Tamil Nadu. The traditional old Brahmins and other items from district wise also it was covered. It was started in Corona time, and it continued, and now after my mother's broken hip, she is not in a position to do it because she is around almost 90 years old. So now we have stopped that one. Occasionally my wife does it. So this YouTube channel, which I started it in 2011 for out of my own passion, and there is no need for any money for me out of this. Many people made a lot of comments when I was airing my views of almost around 10 to 12 videos. Even in that one or two videos I have put it in English. So I just wanted to communicate this. I am not after money. If at all, as per the YouTube policy, many people know, they can Google it, or even they can go and verify it. A minimum of 1,000 subscribers are required, and 4,000 hours of view. 4,000 hours of view are required to get it monetized. Even that also it won't work. It should work when that also I will share it with you. I should have a subscriber base of more than 1 lakh to 3 lakhs or 5 lakhs, and I should have views on a monthly basis continuously around 10 to 12 lakhs, where a sensational news are being posted. There somebody talks about the about the politics or about the film industry people talking rubbish about it, and the people they like to listen or see such type of things, for which if it is 10 lakhs views or 50 lakhs views are there, then probably some $200-300 money may be coming out of it. Definitely such an amount of $10,000, $20,000 in a month, Sarvo Srinivasan cannot earn it. So let us come to the main basket of now EPS 95. In EPS 95, people should know what is defined and what is contributory. This 1971 family pension scheme was closed on 15/11/1995. A small nominal amounts were all deducted in those days by many organizations, private or public or exempted, non-exempted. Everybody was asked to deduct as per the 1971 rule. The family pension scheme was deducted. That was going in the kitty of EPFO. This was closed in 15/11/95, and a beautiful scheme called EPS 95 was evolved out of the think tank of the EPFO officials. The erstwhile IAS officers joined together. They worked out an excellent EPS 95 scheme of a teaming and ladding process. Somebody, the organization EPFO gets lot of money every day. See, minimum of 20 people. If somebody in an organization is working, then PF deduction has become a compulsory. That is normal. Their savings. It is like a savings in an RD or something like that. This money at the time of retirement, that EPFO will return along with some interest. So this money was being utilized by the government of India on various infrastructures, and this money, in one of my earlier videos also I have covered that it was the corpus funds is running into several lakhs crores, almost around 56 lakh crores. When the money was mounting heavily, that time the EPS 95 scheme closing the FPS 95, FPS was closed, and then EPS 95 was started. What is this defined contribution? A defined contribution is nothing but at the time of your retirement, say 58. They kept 58 as your age for the retirement. At the age of 58 or 60, whatever it is the case, if you are retiring, a formula has been evolved that whatever the contribution you have made to that particular kitty, in that corpus fund, they made it a formula initially up to before 1/9/2014. A formula was given 12 months average multiplied by the reckonable years of service, that is from 16/11/95 to the date of your 1 day prior to that your date of birth. The number of days are calculated, then the weighted average for every 10 years 1 year is being added, the whole divided by 70. This was the formula given prior to 1/9/2014. This is called a defined scheme. A definition is already given. Your pension has been defined, predefined. And one more thing, there is no revision of DA or something like that, like a general provident fund where the ministry or post office or army or railways people are getting it. There is no such type of increase in DA every time you get it. A constant figure arrived out of 12 months average, that is prior to 1/9/2014 was worked out. Now the contributory scheme, what is that one? It is normal, simple 8% interest if you have deposited some say 70 lakhs or 80 lakhs. That again, once again, the government of India, any annuities or any insurance companies annuities, State Bank of India insurance or your LIC annuities, these are all in which the investments are being made. Then a normal rate of interest of 8% or 7.5%, whatever, whomsoever the annuities returns are all given, that money you use to get it, and the capital will be intact. The only difference between a contributory and a benefit defined scheme is in case of benefit defined, even in benefit defined also, some people prefer it. Even in our own organization in SABF, superannuation benefit defined scheme was now converted into contributory. There, if you would like to draw more annuities from them, if you would like to return, say I don't want to retain any money on for my heirs, that is for my son or daughter to enjoy. Let me enjoy the entire money, whatever the money, if I get it back from the one, as long as I am alive or my wife is alive, I am ready to take the full contributory out of it. There also the capital is not returning like in the case of Government of India EPS. Now in the benefit defined scheme, there is no return of capital is not there. The capital is totally gone when you die. When you die, your wife gets only 50% and your family gets 50% and you don't get anything. And once your wife dies, then both of them loses their money. The entire 20 lakhs or 30 lakhs, whatever is the one which you have already drawn, rest of the money is being taken as a dead capital for them to distribute it to somebody else. This is the scheme between benefit defined and contributory defined. Hope it is very clear for the people to understand what is EPS 95 benefit defined and what is contributory. Now let us try to understand a very basic principle of why this benefit defined scheme has become a big topic in all over the India, and what is the big deal. The moment when R.C. Gupta won the case, he took a case up to the Supreme Court and got it that the ceiling of 5,000 rupees or 6,500 should not have been there. I am ready to contribute on my actual basic. That is, my basic is crossing 5,000 rupees or 6,500 rupees, then I should be allowed to contribute more on the basic of my actual basic plus DA, on which 8.33% has to be contributed. This is what he argued, and he won the case, and it has become a mandatory for them. Then the EPFO decided to go for a big change on 1/9/2014, by which they passed a bill and they changed it to 5 years average. Now after 1/9/2014, the rule of 12 months average salary was taken at the time of retirement was a high figure on the top, whereas if you take 60 months average, then it becomes a small one, a lightly reduced one will be there on the top, and then divided by 70 continue to be there, and then the multiplication as the reckonable services up to that one. This was also considered. So this particular change was done when in 1/9/2014. Please remember this. The scheme was started in 95. 10 years minimum one has to complete. Then after that it took almost 9 years from 2005 to 2014. After 9 years only this formula got changed through a bill passed in the parliament, and the Ministry of Labour and Finance announced it to their semi-autonomous organization of EPFO to get it changed. So this is very clear with regard to that one. Now many people are asking for the pro rata basis, whether the pro rata will be applicable in 2019. A case was sent out, a question was changed, and then the question answer has given the various dates, calculations and all. I don't know how the Rajamundry or Vizag people in 2019 gave a pro rata basis for the EPS 95 pension calculation. 100% it is not, because as per the RC Gupta's case, with if it is 1/9/2014, after that even one day or even on 1/9/2014, if a person's date of birth is there, or 2/9/2014 if a date of birth is there, then he is retiring on 30th only of September, but whereas he continued his service by one day, so for that gentleman gets a full benefit, but salary has been considered as 60 months average. So this is very clear. People need not have any doubt on this. Now I have explained with regard to the benefit defined, contributory defined, and then the pension, how it is being calculated. This I am not exaggerating. This I am telling it from the circulars available in the EPFO site, which they have already told. Now many people have come into the arena of how to these calculations are done, from where this money is going, how can they give, many people are all thinking that how can they give 70,000, 80,000, 1 lakh, 1,40,000 and all pension, how can they give it? This is what the people are all thinking. So even I would like to say many people are not aware what is the contributions are going on. See, one thing what you know from your payslip is the 12% contribution from your deductions, which is very well openly visible to you. The remaining 12% from the company's contribution, how it is going, in that again a topic I have to very clearly explain to all of you. 1.16% the administrative charges, which the recently Supreme Court has also clarified it, that it should also go from the employer's contribution only. Now the employer's contribution of 12%, 8.33 is there, in which an additional of 1.16% administrative charges is also computed on that one from your account. That is 12% of employer's contribution should go to you. Out of that, 8.33 goes for the EPS 95 pension account. This 1.16%, normally we too argued in the Supreme Court that it should be paid from the company's point of view. It should be debited as an expenditure of a statutory levy, and it should be borne by the corporation or companies or private companies, whereas this has not been taken place. What they say, EPFO has interpreted that out of 12%, 8.33% contribution of the actual basic plus TA will go to the EPS 95 fund. Then 1.16% of your basic less 15,000 rupees, that is the ceiling available from 1/9/2014. On that basic plus DA, that 1.16 is also calculated, and that is being carved out from the 12% of the employer's contribution and gone into the EPFO kitty. This particular money, 1.16% is the administrative charges. What they have told. They have been running the show, say they wanted it. This we argued that should be borne by the companies and the organizations, private organization or public limited companies or public sector undertakings. But this interpretation has gone in different way. But whatever the way, if it has gone, even if 1.16% of out of 12% if it has been contributed to the Government of India EPS 95 scheme, we are still on a beneficial track only by return of capital along with the normal interest of 8%, the exact 8 years or 9 years of your discounting factors goes up to 12 years or 13 years or even 10 to 11 years. That means an average age of a person has been kept as a 70, probably by a year or two or 71 or 72 you will be getting in board. Your wife also gets 50%, definitely the capital gets returned as long as you are considered to be hale and healthy and you get the money back from the EPS 95. So this particular 1.16 is also, it's not a very big amount that it goes out of our packet. Something if we are asking that we have to contribute out of our packet, then it is wrong. What was given 12% by the company, on which 8.33 gone, even 1.16 also they say that less 15,000 rupees from the basic, and then balance only they calculated it and they asked for this money, and this is being carved out of that 12%. Okay, let it be there, whatever it is. So we need not to worry about this particular aspect. Now let us try to understand another important aspect with regard to the EPS 95. What is the interest portion? Very interesting subject. This I would like to cover it up very neatly for all of you. So the interest till the date of exit is considered as a very, very important one for us. You please all understand, the rate of interest whatever CBT has given to the EPS 95 people, the same thing has to be surrendered to the department. This is what the understanding, as far as I am taking it as a clue or something like that. But many organizations, they have already calculated and say what is payable amount to the EPFO, in which they say the differential amount, what is payable and what is already paid on the minimum 5,000, 6,500 and 15,000 rupees, and over and above that what is payable also they have worked out, and whatever the interest earned out of it which has already come into our kitty, we have all withdrawn that money from our trust provident fund, that particular portion has to be surrendered, in which many organizations, they have calculated it. How? They have calculated it to the, what is that called, to the date of payment to the department. So now what has happened is, the question of interest being computed to the maximum level of your, say, March month or June month. So this case started in somewhere 2016 or 17 in various high courts, and then it prolonged up to the 2022 August 23rd, and then the 4/11/23 only, 22 only the judgment was given. 4 months time was given, then later on 2 months extension, another 2 months extension. Now it is up to 26 June, it has time is extended. So till the time, if a person retired in 2014, say in my own case, you just consider it, that is I have retired in October 2016, that means 2014 October, I am by 2 months gap, I am getting eligible for the benefit out of this EPS 95 judgment. I am falling under the category of after 19/2014. Now, if I have to pay the interest on the cumulative amount of the contributions payable between what is actual basic plus DA, in which what is already deducted and paid, if that same rate of interest what is applicable between 2015, 16, 17, 17, 18, 18, 19, 20, 21 up to 23rd, even on 23rd also till March, then April, May, June, then another 1 month time is given by the EPFO for the employers to verify the documents submitted by to the department, and then if any employee commits an error in the online application or anything, they give another 1 month time, though that means it is July or August, till the time if the interest on compound interest has to be computed and made payment. Is it not a big crime? Now people think it over, that the interest what I have earned after my retirement, that is the money what I have got, say around 10 lakhs or 15 lakhs, the money which was deducted from my account, and that money I have to surrender it to the EPFO. That money what I have, what I might have done, I might have deposited with the Bank of State Bank of India or a post office or any small banks, or I have invested somewhere, I would have got some money out of it by way of interest. This interest under section 80L, I might have charged it when I have filed my income tax return. That is depending on the slab where I fall, between 10% to 30%, I might have already paid for every 100 rupees, 10 rupees or 20 or 30 rupees to the income tax department. Now, if the companies are asking me to pay the interest to the till the last date of my payment, that means what income tax suffered already, that income tax along with the interest ought to be surrendered to the EPFO. So from my savings only I have to. If people are having their money in their hand, they can give. If they don't have the money, how can they give? Number one question. Number two question, the interest portion, what I have earned, out of which income tax paid 30 and 70 only I have spent. Even in that 70, I have little bit saved also. I might have saved something. It is not only your interest income, you may have some other income also, house property income also is there, or trading income also is there, or any other income you may have. You must have worked also in somewhere as a consultant, and then you must have amassed wealth also. You must have made some money out of it. In that only you are making the payment. But come what may, a portion of the cake cut from that interest earned as treated as income, on that if income tax is already paid, suppose if the whole interest as per the organization's advice, we have to surrender it to the department. Is there any law by which when I file my income tax return, can I claim back those money from the income tax department? Income tax refunds are being adjusted on the wrong calculations or any mistakes or anything left out. Or if I am getting arrears of the previous income calculations, on that I am supposed to make the surrender this income tax on a higher slab if I have received it in this year. What the provision is given under 89(1) relief, that is appropriation of arrears of income to the previous year's income, and the 26A is also, it provides you the facility of your arrears are apportioned to the previous years and then being calculated what ought to have I have paid. Had I received this money in 2015 or 16, even there also it is 3 years or 5 years, exactly the rules. I have to verify that. So in that case, the appropriation of arrears for which the income tax, what is due to be collected from the public, the government of India has given, finance ministry has given. What is already paid by me, and can I adjust back? I don't think there is any circular on this. So if EPFO is demanding the interest till this date, then what interest they should surrender it to us? They should also pay the interest on the arrears of my pension, which is they are supposed to give it, which will be the same amount of 8% or 7.8%, 7.8 to 8.5%, same CBT interest they have to give. What is the advantage of it? That is why when a case was filed finally in the Madras High Court, there we filed a case and we won the case also. Honorable Judge Parthiban sir gave an excellent judgment, and he said, you don't ask for the interest and let the EPF also doesn't pay any interest on you. You take only the arrears, that too from the date of exit. Matter ended. He has very clearly, very candidly, he has given this judgment in Madras High Court, which is available in the records. But whereas it has gone to the Supreme Court, of various High Court cases have been tagged together, and then in Supreme Court 3 sitting judges, they sat together and they gave this judgment. So in that one, it is very clearly said the interest on arrears of pension will not be payable. Then how can the income tax already suffered on the interest earned by us has to be surrendered to the EPFO, and then whether the income tax department will return this money? This is $1 million question, which I would like you, all of you, to understand this. And then my humble appeal to all of you, please do share this particular video so that it reaches to the hands of the EPFO as well as to the Prime Minister's or Finance Ministry or Ministry of Labour Office, and let them give a thought about this, because this will be a very, very tedious process, and it is not so easy that such an amount of income tax filing return and then adjustment to that, then there also it is not only the 10 rupees or 20 rupees or 30 rupees income tax portion alone, it is the total capital of even the money what I have spent from my pocket, the money I have to surrender it back. Once again, the capital is going back to the EPFO, where it is not going to be returned immediately. It's going to be returned only as every month basis on a on every first, like a salary, this is going to be returned. Now finally, last but not the least, I would like to point out this: when this scheme was announced, many of the stalwarts, they were all telling only this particular portion and explained that if in the event of 20 lakhs or 30 lakhs of rupees in your hand, a chunk of a capital, when it comes to that, the time of retirement, many people, what they do, they give it to their daughter, son or son-in-law or daughter-in-law to do some business, or they just gift it to their grandson or grandchildren. That time the money once gone out of your hand, that's all, you won't get anything. But whereas if the money is kept in your bank, you will get only 8% interest. Now if the money you have not received it from EPFO, then instead of that you are getting it every month, say 20,000, 30,000 or 40,000 rupees pension. Nobody can touch that. That's a small amount of running the family for a middle class mediocre family. Then this money will be of much useful to you. This is what the advantages explained by our seniors, and then we all accepted to that. Same concept here also applies, that if the capital already we have earned, we have spent at the evening part of the life, and we have been running our life with only such a small mediocre income, in that from that capital, now I am going to surrender another. In my own case, they initially told 15 lakhs. Now they say with all interest, interest on interest, interest on interest, interest on interest, like that for 8.5 years, it is coming to 26 lakhs. Whether I will be able to make it out or not, that is individuals' capacities. But many people, they back out because of such a huge amount of 78 lakhs interest when it comes, that the money which already suffered income tax, then how can they make the payment? This is what the biggest question arises. My dear brothers and sisters, hope I am making it a very, very valid point with regard to the income tax as well as on the interest. Please do share my video to the public, so that it reaches to the concerned ears. And this once again, finally concluding that not for anything I am asking. I want a solution to this particular problem, so that when it comes to the reality of making the payment within a month or two, we have to surrender such a huge amount. We have to make arrangements of our own, because every human at the old age, it is very difficult for them to mobilize such a huge fund. It's not so easy. For me, maybe it is easy, because I have my own various lifestyle, and many people like me, they may be having their own funds. They can very well accept that, and they will go, because I am convinced as a leader right from my 21 years when I joined the organization. I was a born leader, that's what the people used to say. And till the time of, till day I have been a leader, and I would like to do service to the people with due respect to the seniors. With due respect to the seniors, I am telling you, I never disrespect anybody in my life, and I always love my brothers and sisters without having an iota of bitterness or hatredness or anything. My dad has taught me that without any faith on religion, on caste or anything, all of them are my brothers and sisters. Anything what I want to do to the public is only service with due respect. This is my absolute terms. I would like to, candidly, I would like to make it to the public, that my intention is only to help people, to make them, bring them some awareness, so that people can understand what is this particular EPS 95. My dear friends, please do share, and so that we get some good results from the EPS 95. But once again, this EPS 95 choice is individual. There is no compulsion whether you get the benefit or not. It is for you to decide whether I am ready to accept this and get the better benefit, or I don't want to get it because this is not a better benefit, this is a cheating. If somebody feels it, okay, it is their own choice. We cannot force it. But only thing, we are trying to bring out some facts and figures so that people can make it easier. Thank you very much. God bless all of you.